Good morning. Good morning, everybody. So surprise yesterday. Finally, some of the things we've been talking about came to realization, and one of the Fed guys spoke the truth, and the markets were disappointed. Yeah, of course. Yeah, we're all sick of this rate cut talk. For no kidding. It's just day to day, but at this point, that's a pretty decisive candle. And one of the things that we've been talking about while anticipating that at some point we were going to get this price correction versus the time correction, this whipsaw kind of stuff, is that, there's all of this support down below. And it stopped right there yesterday, looking at the Dow. I mean, it sliced through the 20. Remember, it gapped up yesterday, and it was like, okay, maybe this thing's going to go up and fill this gap, which was certainly possible. And it actually looked like it was going to do that. You just look at the 15-minute chart. It had gapped up above these pivots. It pulled back toward it. You can see right here. It went up. And typically, that kind of a pattern, a little after 2 o'clock, buyers step in again and into the close. But then the news came out and everybody was like, what? What did he say? And there was this waterfall decline that just cut through support, cut through the 50 MA, cut through some of this, and then stopped at this major support level down here. And so at this point, most days, something like this is going to be followed by a narrow range day. So I don't know if you heard Robert, for those on social media there, Robert saying, that the economics were strong, maybe not what some people wanted, but people are working. And so now, if you listen on the CNBC, they're kind of rationalizing, well, it's a good thing people are going to work. Yeah, of course, it's a good thing. But I mean, I would add to that, who are these people? Are they illegal immigrants that they're counting in here, that the government is giving all this money to and spending and causing this inflation? I don't know. In any event, we know that the things that we've been talking about now for almost 2 weeks, rising oil, rising commodity prices, rising ags, and so on, was inflationary. And it was like, okay, the market don't give a darn, but at some point, is it going to? And, I was just waiting for this guy, I forget his name, what he said, and down the market went. So now, last week I talked about, hey, here's this possibility of a breakout bar failure. Well, that's not supposed to happen, but there's a pattern that when you see it, you got to say, well, there's that possibility. And it wound up breaking through the inside bars low. Down it went. Now it's on major support. And historically, it's going to go lower. I mean, anything that you see like this, it takes kind of like, it could take a whole week of going sideways here, if it could possibly go up. Remember, this big bar is created what we call a price void. Look at that 15-minute chart. In essence, it went down so fast that you would almost anticipate that it's going to move up some degree. And that's why I put this blue line there, because even if it rallies, we want to see the closing prices stay below that 50% mark. And ideally, it'll stay below the 50 MA, from the bearish point of view. And it rattles around there. We'll probably get a lot of 1, 2, 3 continuation patterns today, assuming that things, consolidate yesterday's drop, don't rally too much. And if they rally, this is the risk of the void, where things come down like this. When we see a wide range bar, everything from our way of viewing things, technical analysis, is things have meaning. What does that mean? Well, it's a power bar. Power bars suggest lower prices. It's also what I call the weakest link. Why is it the weakest link? Because there's no overhead resistance. Well, there is, but it's far away. You can see where my cursor is up there. There's nothing, but minuscule little pockets that happened on the way down. So If it's truly bearish, it's going to create resistance. And that happens by creating a pivot and another pivot. And, eventually it breaks lower. Like this looked like it was going to go lower, but it gapped up, And so now probably we're going to have, it's a choppy consolidation day. The news is out now, and markets whipped around. And so it'll probably just consolidate, and we'll see where it ends today. But this level down here, looking at the Dow, is a monster level. And I mean, just look at all of those bars there. That 20 MA, right, that's equal to the 100 on the daily, which would bring it down to this next major support level. If that, seemed reasonable for that to happen. And then from there, we always just look at where the next levels are. I don't know that it'll go down there. So we'll see what today brings, and then into next week, and there'll be more numbers coming out and so on. All right. So spiders, they had the whip way down and then back up, and now it's coming back down, inching back down again. And you see it cut through the 20. You got a monster support level down here. You got this pivot, you got that pivot, and the 50 MA. So again, thinking that not much of will happen today, maybe a little down or up, whatever, but assuming doesn't rally way up here, the 50 MA is a reasonable expectation going into next week. And then we'll see how it holds there. And I now mark this off, now that we've got this big signal bar there, that there's this monster unfilled gap down below. So none of this is going to come into play today. But as we look at this and get our expectations in line that, hey, is this a possibility? It is, but there's plenty of soldiers in the way of that. And we'll see if this all, holds up. And, more data that comes out that is supporting what happened yesterday, and those rate cut expectations diminish further, this will get worse because it's all been baked in. All right. SPX, let me check the numbers again. And I suspect that either one is a no-brainer today. Yet, if you remember yesterday, I thought the bottom side was the no-brainer. I didn't think the call side would get hit, but the put side, with that news came out, I mean, that waterfall that was happening, it cut through that, but that's the risk of news. So now today, let me just double check here because things are jiggling around. 52.30. So this has come down a little bit. But if it pops up, 52.30, 52.40, and down below, you can do 52. Wow, because it's coming down 70 to 60 down, anywhere down here. Right. So any credit spread trade is based on, I believe, based on the technicals that we're looking at, prices will not go to a certain level. What's the probability of getting back up to yesterday's open? Probably less than 0.5%. I mean, because unless there's more news coming out, what's the probability of getting down to the 50 MA today? Probably the same, minuscule. So odds are it's going to hang, at the blue line, below the 20, somewhere in here, unless somebody else comes out and says something, to ignite what happened yesterday. But, we haven't seen, and I haven't seen in a long time on a daily chart, something like this, 2 monster red bars in a row in quite a long time. All right. Just going through the other markets, transports just whipping around, still just a trading range, not a big deal. Interest rates, as you can see, they're up, and they look like they're going to go higher. Yesterday, they hit this cluster of opens and closes that we marked off, and it backed off from there. And so now it's up on the news. So that's obviously not good or helpful for the markets at all. And the 5 year, take a peek at, you can see that that's going up too, and it looks like it's going to go higher. You can set an alert. Uh, Futures, you know, down at the bottom of the wide range bar, they're coming back off again. Probably going to hang around here, give or take. That's just typically what happens. Right? When we look at patterns and look at multiple time frames, we come to an assessment of what's likely, what we're doing here pre-market today. And so even if it goes down, that pivot low down there is likely to be a significant support level since it's down a whole bunch already. And it's not likely to move up very much either. Because everybody's just looking, typically with a bar like this, it's like, okay, it'll bounce a little. There's a void there. It's down a whole lot. And if you start from several days ago, I mean, it's down a considerable amount in a relatively short period of time. Just putting how many bars, down 100 points. And I mean, percentage wise, we could see what it's down already. Almost 3%. So, all right. So this is on major support that cut through the 50 MA, starting to inch lower again. Same story, probably going to just hang around here. We already looked at the Dow. The Russell, right on the 50 MA. It's holding that area. Has been reached. Okay. So next support, major support is down here. This looks like a measured move kind of scenario, which coming down to that pivot is a pretty good possibility. Right now, it's just holding the 50 for now. You're looking at the ETF. It's not quite at the 50 yet, so the futures are there. And the ETF probably going to tag that. Just looks like it's heading down that way, which would suggest to me that that's going down. Well, that's kind of hanging there. But I'll throw that in there. XBI, that was a disappointment, but there's lots of disappointments here. This double bottom that was forming on the biotech index here in that bottoming tail bar, and then it gapped down. So that looks like it's got to come down further toward this major support. Here's what we looked at. Gold is not doing too much here, probably just resting. It is extended. Odds are it's going to go higher. Silver breaking out. Odds are it's going to go higher. Crude oil. There's your golden cross. Yeah, we joked about that in MT Live, but that's likely going to go higher. Not good. Copper going to go higher. There's all this inflation stuff out there. So it was like, what the hell is everybody's looking at? But, until the realization comes as to other people looking at it, oil going up, of course, airlines now are coming in, and the dollar should be up a little. It's just reversing a little today, but that's had to move up. So basically, there's nothing good out there short term. We'll see how this consolidates, how low it'll go. We'll figure that out as time goes on. But right now, after yesterday's event, odds are it's going to go lower before buyers step up and feel confident to resume the uptrend that's still in place on the higher time frame. So this isn't a reason to get too bearish. In the short term, yes, we think things will go lower, but intermediate term, we want to see these weekly charts hold up relatively well. And the problem, if you will, is that, this consolidation, it looks like it's going to break that. But as it comes down to these higher levels and whole numbers, I think buyers will begin to step up again. So, all yours, Dan.
Good morning. Happy 0 DTE day. in the green room every day. We finish with a bias for the next day. And so what was our bias? We knew we had employment numbers. So, that's a gap risk. But even excluding that, uh, fluid water fog, Greg covered it all, nine, eight, I don't know percentage, but let's just say 4 out of 5 times, or in Sam's case, 8 out of 10, get an inside day. So that was our bias yesterday. As long as we stay in the bottom third, 40% max, eyeballing it of this waterfall. So I'll just draw a line right there. I don't want it to go over 518. Chop around. And, day trades, we can do whatever we want. We'll make it a good setup. But for swing trade, ideally, we want it to chop around 1 or 2 or 3 inside days. And next week will be a bear 1, 2, 3 shorting party. So that's our bias for swings. Yes, I don't, my only, well, we don't have big inventory actually. Gold alarm went off where, it cracks me up when people come on TV, CNBC. Somebody came on, today's Friday, somebody came on Wednesday and said, buy gold and oil. And I'm like speechless. And like, if you believe in technicals, you're an effing idiot. We were long GLD on this gap breakout day. We're still in it. And so on that note, Craig, I just texted you. And when do you want to, it's going to depend how you want to manage it, short term or long term. If it was swing trading, I'd just trail the prior bars low. If you're going for the bigger gains, the monthly breakout all-time highs looks higher. You got to let it come in and pivot against you. So it's how you choose to manage it on what time frame it is on. ANAT, we did, no, not ANAT. Where are you? Akamai. We did a half lot short. We were during the waterfall, we were looking for a bounce and never got it. So we just did a half lot down here, looking to add on that. SMCI, I've been watching this thing for a while. We got our 180 reversal here. So this is a multi-bar turn sell setup at the declining 20. So 30-minute low. I'd be looking to push short the stock. Mister, I've been watching for weeks here, gapping down. We can sell way out of the money, naked call. This one still has juice. SMCI, they've been sucking the juice out of it. So it's not as attractive for naked calls as it was over the past weeks and months. What else I got? Guild, we're still short via long puts. That's been a nice home run trade. Marijuana, what a friggin' whack-a-mole 180 on that. Crazy. I mean, we're in this again, similar to the GLD breakout. So we're in this at 350. So we still have a nice open gain because we're managing that off the longer time frames. There's only one earnings of interest, Cross. I posted it pre-market. It's a long watch. This is a buy setup and an uptrend. Last Wednesday, MT Live was talking about moving averages. Look at these moving averages. I got rising 200. Look at the angle of the 20 and the 50. That's telling me, without even looking to the left, that is telling me it's been on a power move higher. Do y'all see that? That would be my opinion if I took the candles off. And so now it's rested. 20 coming into the 50, blasted out, buy setup, gapping up here on earnings. So it's a big gap. So I'm looking for a controlled pullback on an intraday chart. That's my bias right there, cross in the middle. Moss, I've been watching for a couple days here, and it's kind of doing exactly what I wanted, which is it's greater than 100% breakout. And when, I tell Sam this all the time, when he kind of gives me ideas, and or I tell everybody, I would not, because the gap's too big relative to but hold on. So this is a prime example of when I make the comment, let it go sideways in a bullish manner for a couple days. So Moss is doing exactly that right now. So ideally, we get another inside day, and then we buy over the week's high on Monday. So Alex, it's a personal choice of what sound. You don't hear my sound? What do you think? All right. So it's a personal choice when you trade gappers and how aggressive you want to be on board and what time frame you're trading. Is it a day trade, scalp, swing trade? Let's say hypothetically it were gapping right here to 105.50, or 106, somewhere in here. So the gap's not up to 111. Then I would say, without a doubt, buy a 5-minute high. So you got to apply gap analysis. But now that it's gapping up here, would I personally buy a 15-minute high? I'll tell you for sure at 9:45, but as of right now, no, because the gap's too big. But I got it here as a watch. Let me change this to a 5-minute chart, actually. All right. I don't have a whole lot to talk about here. My big watch list got friggin' destroyed yesterday. Here, Greg did a video on YouTube. Here's a couple he mentioned. A team, bearish consolidation. This is a call spread idea. Crowd. This is a directional idea. Let me put this in a window. And you know the drill. If whenever I say it's a directional candidate, well then by definition, that's a call spread candidate too. Once again, ideally we get a 1, 2, 3. But guess what? The market don't care what I want. So you've got to decide. Do you want to do a half lot, full lot, under yesterday's low, stop yesterday's high? Personal choice. I'll tell you probably at 9:45 or 10 a.m. because I just want to see what the market's going to do. Because with this small gap, Greg and I were chatting pre-market on this initial 8:30 announcement. And Greg, made the comment to me. He said, "Oh, big old ugly bar." And I'm like, "Yeah, but look on the 15-minute chart." And I said it could also be a bullish retest. So I think the first 30 minutes here are going to be critical. I would prefer 30-minute high to do a 0 DTE put spread, and then to get our, hold the lows and set up our 1, 2, 3 scenario for next week. If things continued lower here, and at 10 a.m. we take out yesterday's low, it still looks lower, but you got to fight with this big void. So you still need to stop yesterday's high. But crowd is a candidate. I like this closing breakdown so much. This is a candidate that, yes, I would do a 30-minute low. All right, so this is a tier 1 new trade to me. Let's see, Greg mentioned ANET. Yeah, that's more of a call spread. There's not a good void for me for directional. FICO, that's very light volume though. Look at all these. Wow, look at these intraday gaps. That is not only rare, but it's also a sign of very bearish intraday sell-off. That is strange. Look at the size of these gap downs. Just on at the close of a 15-minute bar, and then the next bar opens way the heck down here. Man, could you imagine if you sent a market order? And here, I'll just eyeball it. 12.45, 12. So you had $8 slippage, $8 or $9 slippage on your market out order. That, folks, is a lesson in why we trade liquid stocks. All right, Echo Whiskey is a breakdown. This would be a no-brainer call spread, but there's no strike up here. But also, this is a candidate for a wait 5, 10, 15 minutes. I don't know. Like I said, I want to see what the horsemen are going to do. But if the horsemen turn weak after, I'm just spitballing, after 9:45, let's say, then you can short this as a day trade. GCTS, I just saw, gapping up here. That's a huge percent. But this is a 100% footprint of a SPAC here. I don't know why does a SPAC hang around at $10? I just don't understand that. And then they, crazy price action. I mean, I would never touch this daily, but it might set up for a day trade for anybody who likes that stuff. Remember J&J was talking about buying some company. They announced Shockwave. They announced that they just announced their close. They're going to close on that deal. But so many things got destroyed. Now this is bearish, daily, weekly, monthly. Look at the monthly as a sell setup at the 20 and the 10 AMA. Yeah, donut. I looked at it. What did it? I got an upgrade. Okay. I didn't notice the gap earlier. So yeah, that looks good. Yeah. So let me just reset my Moss alarm. So Moss now is coming in, which is good. Which is good. Now I don't have to worry about it till my alarm goes off. Yeah, donut's a nice gap for a day trade. Yeah. Yeah. And you got bullish pre-market here. Yep. Yeah, that's a very nice and a nice void. It's just I don't like them when they gap and go and rip. But that is a very bullish pre-market gap and consolidation. Well, good for you. You're getting paid. So that was a good pattern. I did look this morning and I deleted it because I didn't see any gaps at the time. All right, cross middle chart. Say the gap's too big for me. It's already 50%. Our guild new lows. Sam I am, take a bow. This was Sammy Boy's swing trade he gave us. 70.65. And we purposely bought puts for next week to give us time because my expectation was this was bearish on all time frames. I don't see the option market open yet. It's strange. But we have $3.50 of intrinsic value. All right, maybe they are now. So it looks like 370. I'm gonna try to get $5 out of the last third. GIS, Sam, I think that's you. Hey, for those of you that live in Chicago or any other cold place, it's going to be 80 degrees and sunny in South Florida today. So if you want to come on down for lunch. Just looks great. I'm sorry, Gil. Yeah. Just alarm. Yeah, this is good. All right, crust coming in, but I'm not